Good morning everyone, welcome to Trading the European Open live here at the Live Trade Room. Today now is Wednesday the 10th of October. So just to give you a very brief introduction to what you can expect over the course of this trading session. We're professional traders trading with live capital, where we look to identify high probability trading opportunities for the session ahead, where we look to execute trades with a high degree of consistency in our approach, and we look to manage those trades with discipline, making sure that we look to cut our losers short as quickly as we can, and of course look to let our winners run. So with one aim, and that's obviously to book in consistent returns on a consistent basis. Okay, so without further ado, if I could draw your attention to our risk warning currently up on screen, please do take the time to familiarize yourself with this risk warning. Okay, so before we begin, it's important for all traders to make sure that they have an understanding of potential market moving news. And for this, we're going to get up Forex Factory. We'll just slide this across here. And like a good example of this is you don't necessarily want to get into the British pound prior to 9:30, or let's say you were looking at selling the British pound at 9:25, for example, not being completely unaware that there is a major news event at 9:30. That's not that doesn't give you the best opportunities to be consistently profitable. So it's just be mindful of these types of things. Yes, you can get into a pound trade well in advance of these events, in the build up to this event, but just be mindful that we do have a GDP figure at 9:30 and a manufacturing production figure at 9:30 also. As we look through the remainder of the day, not an awful lot of news to have to deal with. We do have PPI data out impacting the US dollar at 130, and we've got a Treasury currency report data out at some point in the afternoon as well. So not an awful lot on the news front today, and that is of course outside of the more macro events, the things that are really shaping these markets, global trade talks, Brexit negotiations, geopolitical concerns within Europe, and the fiscal position of Italy, which is precarious, and the impact that that's having now on Greek banks, for example. So there's structural issues out there, sanctions against Iran, the supply issues, or the supply concerns regarding oil, and Trump now suggesting that the price of oil is too high. So there's lots of macro events that can impact these markets on a regular basis. So it does make it for challenging environments, but there are good opportunities to practice the skill necessary to be consistently profitable. Okay, so let's get up the trading platform then. Sorry, just do bear with me just a moment while this is just loading up, and I'll slide it across. Yesterday's market was, Monday we had a number of bank holidays. Tuesday we had some initial moves, and a lot of those retraced as the day unfolded. So we're certainly experiencing choppy market conditions once more. So let's start, as we always do, with the euro dollar. So what we can see by this is strong move lower. The dollar really was strengthening for a period, and then retraced quite considerably, and now it looks like we're potentially heading lower again. So a bit of a mixed bag really for the euro dollar. It would interest us if this market could trade below the weekly low, which is the 1460 level. We're not too far away from that, 20 odd pips, but that would be the level that would interest us with the euro dollar to the downside. The pound is strengthening again, just bouncing off its lows, so this is technically just a pullback as things stand. The level that would be of real significance and would constitute a structural failure to the upside would be the 3300 level. So we're a little bit away from that yet, at which point we could get a rollover to the downside at any moment. So we'll keep a close eye on the pound dollar. It doesn't really give us high probability opportunities just yet. We're clearly seeing a bit of a floor around the 112.80 level, and a bit of buying is coming in today. How sustained that will be, we're not obviously too sure. For the short term, we're currently trading inside yesterday's range, inside yesterday's highs and lows, so we don't really have much of a directional bias on this market just yet. Moving on to the dollar Swiss. So we've discussed this through our daily trade watch video. If some weakness starts creeping into the US dollar, then we've got a couple of markets that are primed for opportunities to sell. The first one is the pound, is the dollar Swiss, below the 9900, effectively just below this level, and you can see this market has bounced off that level already this morning. So it may be a case of being nice and patient with that market and see if we get any follow through. The other market we were looking at to the downside below the 29.34 level is in the dollar CAD. So as the oil markets move to the upside, it's likely to favor a bit of a dollar strength, but as you can see, it's kind of met with a lot of US dollar strength. So we do like this market below the daily lows, which for now would be this kind of level, which is the 29.28 level roughly. So if we do get this market just rolling over to the downside, we might look to get into it and see if we can get a little bit, and this would be in line with this sort of more recent trend, being able to push these prices, squeeze them lower. So this could be very much a situation of the right trade idea. We need to probably be a little bit aware of the, I'm just going to get up to my pen just briefly. So we've got this little technical channel to the downside, so we're getting these prices bounce between these levels, and now we're coming up at these sort of higher levels. The next level is very much to the downside purely from a technical perspective, and we have broken it, and we are currently below this ascending level as well. So if I take all this away, there's a bit of a floor around this weekly low, so we might see these prices edge lower, even if it's only on a short-term basis. And then if we start breaking above these kind of levels here, which would be the 30-15 level, then it's actually game on to the upside then at that point. So we've got there's a couple of options in which this market excuse me, I do apologize. So we've got a couple of ways in which this market can move. So we'll keep a close eye on these. In fact, these are two markets that we might take a strong look at. Let's see what's going on with the Aussie dollar. Sort of the dollar's sold off again, or the US dollar, should I say, sold off against the Aussie, but then has kind of retraced a little bit. I'm sure similar situation for the New Zealand. And the New Zealand has bounced off this previous level, so could we be getting the next leg to the downside? So we've got this decision to make regarding the US dollar. If there's US dollar strength creeping in, the Euro dollar, Aussie dollar, New Zealand, potentially the dollar yen could be good opportunities for us. And if there is dollar weakness, then as things currently stand, the pound dollar, the dollar Swiss to the downside, and the dollar CAD to the downside could be good opportunities to push those prices lower. So what we're finding is the dollar is kind of strong against some currencies and weak against others. So that obviously creates a little bit of conflict. We're getting a strong continuation in the euro pound. So really strong move here from the 88.48, and we're now down at the 87.23 level. So we'd expect this market certainly to squeeze down a little bit further to the 86.92. So this market has been very choppy to trade. It hasn't been the easiest market to get to grips with. So that is a little bit of a concern. Looking at the pound yen, we can see that we're trading within this kind of range. The previous move that has come before it is from the downside, so that there's the potential for the higher probability trade would now be to the upside. This is like a bull flag, effectively. So if we do get a breakout above certainly the weekly high, the 149.71 level, then it would constitute a good opportunity to push this price to the upside. So nothing to trade just yet, but potentially something stacking up. We might be seeing a little bit of a floor around this 129.20 level, and today's price action now has been bullish for the euro yen, but as you can see, there's been a little bit of a retracement of those highs, so that's worth taking it on board. Moving on to the commodity markets, we can look at this, and yesterday finished actually quite bullish in the end after what was looking quite bearish for the majority of the trading day. But as as we've seen in many of the markets yesterday, we had strong pullbacks across the board. So we do have these strong pullbacks. So price is just consolidating around the 11.89. We still expect it to the downside. We might just need to be patient and see if we get that opportunity or not. US oil. Potential to buy this market above the 75.29, and as you can see, we're a little bit off that level. We had a little bit of a pullback again yesterday. Similar situation for the UK oil, and with both of these oil markets, the weekly low, which is the red line in here at the 72.90 level for the US oil and the UK oil, same level 83.02, would constitute a structural failure actually to the downside. So it's something to keep a really strong look at. Sorry, that line is not very well drawn. So we have something like that, just supporting prices at all of these levels, pushing prices higher. However, a break beneath this level here would represent a really strong structural failure and would actually give us an opportunity to start selling this market as well. So we've got a really kind of tight channel, just pushing these prices to the upside, and we're looking for that structural failure where we break out of that pattern and start creating a series of lower lows and lower highs. So that's UK oil. S&P, we're firmly contained within inside yesterday's price action, but you can see that the price action really since Friday has been lethargic. It's kind of it's got a distinct lack of direction. We keep looking to drive these prices lower, but we see very quickly that buyers start coming in and start pushing these prices to the upside. So we kind of have a mixed bag with some of these equities, and the price action is not great to trade. Firmly contained within yesterday's highs and lows, so really we want to see a little bit of direction. The FTSE has the potential to start to squeeze lower. So this, we're currently below the weekly low, so this has the potential to be one of the markets that, certainly with this price action just sitting in here. We'll come back to this very, very shortly. Just finishing off with the Euro stocks. Again, we're likely to get a little bit of a squeeze lower again today, so we might have a look at this as well and see which market gives us the best opportunity. So we can look at the Euro stocks and the FTSE. And we might have a look at this right now. So we're getting that little breakout at this level. We'll see how this market starts to play out. It's worth looking at the gold market, because there's still, we can have a look at this market, although this is a little bit on the choppy side, isn't it, from a price action perspective. Has the potential to squeeze lower below this sort of sideways moving price action here. So we'll add that to our list of potential trades. I think it's important to look at the euro pound, but maybe look to get in on the pullback. Okay, so we'll have a look at the dollar Swiss just to see if we start seeing any dollar weakness creeping in. We're very close already to, we're only probably 10 pips away from this low, and that might give us a bit of an opportunity. Okay, so this is our trade plan for the session then. So so what we'll do is we'll look at the dollar Swiss. just on the top left hand corner. The next currency pair we look at is the euro pound. We'll have a look at this, see if we can capitalize on a strong pullback. Maybe we can get the next leg to the downside. And then to finish off our trade plan, we can look at the gold market on the top right hand corner of the screen, which is currently just ticking to the downside. And finally, we'll look at the FTSE market. So we're currently getting these sort of breakout moves from this level. Might just have a look at it on a smaller time frame. Right, okay, we are getting this move to the downside now in both of these markets. What we'll try and do is get in on a pullback if we possibly can. So we can monitor both of these markets on the right of our screen. So what would be ideal is that if this market actually bounced back to the 1189 level. First pullback level is 1188.81. And the second one is the 1189.28. So we're getting this gold market just flushing lower. So we can be a little bit patient and just wait for an opportunity and a pullback. Let's have a look at the euro pound. So the dollar Swiss is obviously pulling back in another direction. So maybe that's a market that we'll just monitor. We do have potential resistance just around this level. So let's see how price behaves at that level. So we can look at these three markets on a minute time frame. So there's our level of resistance. This little pullback does give us a good opportunity with a really tight stop loss on this market. So what we can do is we can get in on this pullback. Just to see if we just get a little bit of follow through at that level. So let's get into this market. This is going to be a very small trade. So we just put it up here at the 34 level. So this is a 7 pip stop loss on this trade. So it's a very, very tight stop loss. must admit I'm not a massive fan of trading the euro pound because of the choppy nature of it, but if I can get into it with a really tight stop loss, and if the market moves in our favor, then obviously great, and if we can break below the 87.32, then that's objective number one met. We'd like the price to flush lower, give us a bit of a pullback, and then hopefully we can take risk off the table at that point. If we do get a break above the 87.31, then of course this is a market that we're no longer wanting to be in to the downside, so that would be a structural failure. I appreciate it's on a 1 minute time frame, so that is the time frame in which we're getting into these markets. And what we want to see is, don't mind these pullbacks, but what we want to see is this level be breached, and then hopefully the market continues to this level. So we've got two objectives now with this little pullback. So what we want this level to do is to hold and get that little market moving lower, and then we need to break the 72.23 level, see if we can push lower. So that's the first trade. Nothing really to trade just yet regarding the dollar Swiss. We're seeing the FTSE market just pull back a little bit. So it might give us a little bit of a pullback trade around this level. 72.20, we've been talking about that level quite a lot. So that's our level there. Okay, so let's see if we get a bit of a turnaround, bit of price action at these prices. So we've had that pullback now in the FTSE market, so we're back at that 72.20 level. So now let's see if we get a bit of turnaround price action, and that's just giving us the opportunity to suggest that sellers might start coming into this market. A little bit of consolidation around this price, and then a little bit of volume coming into the downside. So we can look to sell this market now then. So we've even gapped lower. So 72.32. 72.34. So we can again have a pretty tight stop loss on this market as well, and see if we get another move to the downside. So the level that we'd like this market to break would absolutely be the 72.12, at which point this low here would become our new stop loss, and it will be a good opportunity to take risk off this particular trade at that point. So let's see if we get that opportunity. Let's see how volatile these markets are today, and if we do get those opportunities or not. See, this is what we want to kind of see. I mean, apart from this sort of volume candlestick starting to kick in now. So we want to see the 87.31 level just hold. And now the dollar Swiss is just creating what's called a structural failure to the upside. So we're getting a break above the 99.21. So there's a bit of strength coming into the US dollar. Okay, we'll let these markets just play out. The gold market is not really doing anything. We've had the initial flush lower, and now we're getting a little bit of just a lot of consolidation starting to kick in. So there is a nice potential push to the downside in this market, where it'd be sort of adding to yesterday's potential weakness creeping in, but really we're looking at Monday's candlestick for more affirmation to the downside. So what we'll be doing is seeing if we can get a strong move to the downside in the gold market. So so if we get a break below the 1187.97 level, we could certainly use the 1180.65 as a good level for us. Maybe we get our pullback to the 1188.81. Getting a little bit of a rejection in the dollar Swiss. So it'll be interesting to see how this market closes. There's plenty of scope to the downside. And this is virtually the level that we would be interested in getting into this market. It does coincide with these lows just sitting in here, so we're at that level, so that can give us a little bit more confidence to get into these trades or around this kind of zone somewhere in here, and maybe look to place a stop loss just above this level. So we might be able to get a few trades off this morning. So that's what we want to see. We want to see a bit of procrastination, and then if we start seeing some selling coming in, then we might be able to get into this to the downside again. So we've got the close above. Oh, I was in the middle of posting that actually. So I've just posted up on the chat function, guys. So if you do have any comments or you got any questions about what we're doing or how we're doing it, feel free to use your chat box, and we'd be happy to answer any questions you might have. And also you might be looking at other markets in other ways, so do let us know what it is you're trading. And so the gold market is kind of created a bit of a structural failure to the upside, and we're getting that strong, really kind of strong pullback. We did look at the 1189 as well. So that's these levels sitting in here. So maybe the pullback will extend a little bit further. Anywhere between this zone, we'd be happy to look to get into it. So we'll just wait and see if we get some so this is our pullback trade. So the dollar Swiss is really struggling to break above that 99.21 level. So now we're getting a bit of volatility coming back into the downside. So we'll see if we get some follow through. If this market starts to squeeze lower from these levels, then we'll look to get into it at this price and just place a stop loss. Again, a fairly small stop loss as well in this market. We can see if we can let these winners run, especially the gold market. It's got real strong potential to the downside. So so it looks like we might be able to get in at this price. So one more click just below that 188.69 level. So one more tick lower in the gold market and we'll be happy to see this price continue lower. There we go. So so that's our gold trade. So let's place our stop loss. 1189. 1189.62. So just up here, just taking into account the spread. Yeah, you're absolutely right. So this is sometimes when you log off your platform, the default switches back to the default, which is 1.0, and normally we trade 0.1 on the gold market. So you're absolutely right. It is a trade which is drastically oversized, and it is going to be a trade that I will have to personally pay the price for that. It's a significant oversight. You're absolutely right. It was an error. I suppose the fundamentals behind this trade are still pretty good, with a strong with a significant potential to the downside. So so we're currently having a little bit of a pullback, as you can see, on a 15-minute time frame. Yeah, it's just pure carelessness, really, Renko, isn't it? It was just something I didn't notice. So a big error, and it just shows you the importance of making sure well, it's not a case of not calculating trade size properly, but it's just being mindful. If you do use one-click trading, you can obviously take it off your trading screen. You can use an order tab, which generally sort of makes it a bit easier to kind of make sure that you are trading at the correct levels. It's kind of a box that you would have to sort of actively interact with. So it is obviously a concern to use one-click trading, and I suppose this is a harsh reality, really, of using one-click trading, is that if you log out of your platform and you log back in, it doesn't do it all the time, which is something that is it's a bit of a concern. So sometimes it does, but as you can see, like, some of these are just 0.10 for the dollar Swiss, for example, and the pound dollar, and it should have been the same situation for the gold market. So we've got the potential for like a double top formation here, which would be in keeping with this break to the downside. So this is a trade which is drastically oversized. It's purely an error on my part. I'm just not taking note of the fact that I was trading a size that we wouldn't ordinarily trade, which is 0.1, and unfortunately got in at a 1.0, which is one full standard lot size. So that's a pure error on my part. And it could be a costly error as well. So right now I'm happy to bear the consequences, really. And if this market breaks lower, we'll be looking to not allow it to come back on ourselves. So we'd be looking to take this risk off the table as quickly as possible. Just hopefully we'll get a bit of a flush lower. Like we're still trading this market in the right direction. We're still looking to see if we get a nice move further to the downside. So let's see what happens with this market. Is that right, Renko? It happens when you switch from the index to the gold. It holds the lot size from the indices. Okay, interesting. Yeah, so you had the same yourself where you switched from the S&P to the gold market. Yeah. I mean, for sort of account preservation purposes, then try to get out of it as quickly as you possibly can. Unless it's something that you are, I guess, willing to take that so you're willing to take that particular hit. So yeah, it's not a good position to be in, of course. Let's see if we get any follow through to the downside. We won't allow this market to come back. Technically speaking, now we're getting, well, hopefully we're getting close to a double top and a structural failure to the downside. So we've got to close below that level, so we want to see some continuation now. Let's see if we get this price ticking lower to these 1187 levels. Right, let's close that trade, and what we'll do is we'll look to get into it again if we get a break below this level. So now we're getting that push lower, which is so 0.1. So let's look to sell this price and see if we can stay into it for the longer term. Obviously, I just wanted to get out of the error that I made. Oops. So let's go into this on a smaller time frame. So yeah, much more comfortable with that. So we've got the 11. Let me go into it on a 1 minute time frame. So we have the 1189. 1189. The 04. So we'll add. We'll take it up to the 60 level, just allowing for the right. So much more comfortable with that. 212 pips stop loss in this market, with the expectation for it to continue lower. And apologies for that. That was a complete error on my part. That would have been a tough one to explain to to James and Tasso. So look, I suppose the lesson that can be learned is to make sure you always, of course, trade the correct size suitable for your trading account. So it was always our intention to trade 0.1, which is 1 mini lot when we trade the gold market, but unfortunately the default setting kicked in and it switched back to 1.0, which is 10 times the size of the trade that I was looking to get into. So that's obviously a big concern. Now obviously I got away with it in this respect. We did the correct analysis, so we're fine and comfortable with it now, but obviously it exposed an amount of capital that was certainly not too comfortable with there for a little bit. So we're now getting into a bit of profit here on the FTSE 100. We've we've experienced the strong pullback. So we're hopeful we'll get a little bit of a push below the 72.12. So let's see if we do get that bit of movement lower. And we're in a bit of profit as well in the gold. And we'll look to see if we can trade these markets for certainly the day. These could be intraday. Yeah, I took a little bit of profit on that first trade, and in the end, so I was more than happy to just break even on it, to be fair. But yeah, no, there was a bit of profit on it. So yeah, just potentially a very, very costly little error, and we've got the gold market continuing lower, so we do want to stick with this and hold this market. We now have the correct risk exposure in this trade, so it's only 212 pips is our pip exposure, and we're trading at the right size, 0.1, so we're now comfortable to stay in this trade. And if we get pullbacks, we look to use those structural highs to see if we can get these markets moving to the downside. So yes, a little bit uncomfortable there for a brief moment. We still had this pullback in the euro pound. We're in a bit of profit in the FTSE, so hopefully that will continue lower, and we'll see if we get these markets moving lower. I'm very conscious of the time, guys, so we do need to switch across to our traders at the live trade room. They will be wondering where I've got to. So I'm going to be switching across now. Please do take a brief moment to familiarize yourself with the description below. If you would like to join us, we're still currently offering a 14-day free trial. I think we're doing it for just another week or so. So do feel free to click on the link. You can join us for 2 weeks, completely free of charge, no commitment of any kind. And if you do decide to join us, we offer over 76 live trade rooms per month, and it's a really strong grounding in, I suppose, trading the markets with consistency in your approach and discipline, of course, with regards to protecting your capital. And I know today's session probably wasn't the best example of that, due to the fact that I made a significant error in terms of not seeing the trade size that I was placing using the one-click trading function, which is great, and it allows you to get in simply, and it has lots of positives. But obviously the downside is if the default setting kicks in, you can obviously instantly get into a trade when you don't mean to trade that market at that size. So just do be mindful of that moving forward. Yeah, so look at the details below, and if you would like to join us, you're very, very welcome to do so. And if you do want to stay on, then it is only $9.99 per calendar month, so we hope it's a complete no-brainer for you to get a really strong grounding in terms of trading these markets. So hopefully you'll find it very affordable. Please do connect with us, give us a thumbs up if you can, and do subscribe to our YouTube channel. Just click the bell function as well, you'll be notified when we go live. And also through our Facebook, Instagram, Twitter and LinkedIn channels, the details are there up on screen. So all that's left for me to do now is to thank you very much for joining us. Do take care, and we look forward to seeing you next time. For everyone here at the Live Trade Room, take care, and we'll speak soon. Bye for now.